Okay, well, good day, everyone, and welcome to the July webinar, one of PrimePay's regular monthly broker webinars, part of a series that we have throughout the year. We want to welcome you today here on July 6th, just a few days here after our Independence Day. Thank you so much for joining us. Today, my name is Steve Jackson. I'm the Senior Vice President of Strategic Development and Channel Sales here at PrimePay, and I am thrilled that you have joined us here today, even though I can't seem to speak well. Hopefully it will get better here over time. But I am thrilled to be able to bring to you one of our annual webinars that we generally put together each and every year, at least once a year, and that's a compliance grab bag webinar. And the reason why we name it that is because it's normally a little bit of a plethora of several different compliance items. You know, there wasn't just one that we wanted to focus 100% of our energy and time on. Let's take this next, 45 minutes to an hour and just kind of touch on some of these key components that we think you will find very valuable. Why? Because your employers, your clients, these businesses are having to deal with many of these new requirements. And what better to get information directly from one of their most trusted advisors, and that's you, the benefits broker. So thrilled to have you here today. Let me run over some of the ground rules or the structure of our webinar here today. We would love to hear from you here today, but we have muted everybody's lines. We've got quite a few folks on today, and so it's best to mute everybody. However, we want to hear from you, and what I'd ask you to do is go to your GoToMeeting menu bar. There's a question bar or box there, and as I go through the presentation here today, I would ask that you go ahead and type in your question, okay? Depending on the timing and time of the webinar here today and number of questions, I will try to address those as we go along. Many times I'm able to do that, but not always. If I'm unable to get to your question today, we will follow up with you, okay? So if you have a question specific to the topics here today, I'd love for you to go ahead and type out your question, and we will get back to you as part of the follow-up. Another key question that I get is, can I get a copy of the recording? Absolutely. PrimePay, what we do here each and every month is that we post the recording to our webinars on our Broker Concierge YouTube channel. And you will receive a follow-up email from us, which will provide the link to that site or to that YouTube channel so that you can view those recordings really at your leisure. We also, as always, we try to provide some exclusive content for our Broker Concierge partners, and today is no different. We'll have some of those key items here at the end of the webinar that I will talk about here today. So we're thrilled that you joined us. Even here in the month of July, even though maybe it's not the craziest busy time of the year, it's still very busy, and I want to thank you for taking that time and sitting with us here today. So I want to make this time as valuable as possible. So what I wanted to do here today was focus on a couple, just a handful of items that will be part of our compliance grab bag today. And so there's really four things here on the agenda. We're going to focus at least more of our time, the majority of our time here today will be on the Department of Labor final overtime rule. We have seen the rules impact to business owners here already. Employers are already starting to get the information as it was laid out here in May, really trying to understand from a practical basis what its impact means. And I think it's important as a benefits broker to fully understand what this overtime rule means to your clients, because you can bring a great amount of value to the conversation, to the discussion. I mean, oftentimes you are looked at as the compliance officer. So if anything out of the webinar today, if we can kind of give you additional value-added information that you can take to your clients today and talk about this intelligently and practically, that's what we want here at the end of the webinar here today. So the final overtime rule, we're going to discuss that, kind of go over that information, provide some examples, hopefully provide some real insight there that you can take away. HHS and IRS. there are two opportunities for employers to appeal whether an employer mandate or penalty should be assessed to that employer or potentially to that individual. And I wanted to provide a brief comparison of what your employers are going to be facing as it relates to the HHS Employer Notice Program and the IRS appeal process. What does that look like? I think you'll get some really good insight, made it very succinct in regard to just line these two up and let's provide some immediate instruction to employers on how they need to handle this process. But understand the difference, if there is a difference, between the two. What HHS is going to represent in their employer notice program and also the IRS appeal process. Thirdly, we want to touch on the recent impact and response after the ACA filing process deadlines have now passed. As you are probably aware, June 30th has now come and gone, which was the e-filing deadline for employers. Now, if an employer was manually filing their forms 1094 and 1095, that was to be done here at the end of May, right? So deadlines have passed. Information now is being sent or provided back to the employer. Let's just kind of talk about what that impact, what that response has looked like. I think that will be helpful for you to understand the terminology and the information that's being created or produced by the IRS after these submissions have taken place. And I think you can really greatly impact that conversation. The fourth item, this will probably go the quickest, but very important. You can't forget it. Let's provide the recent update on the PCORI fee. The PCORI fee is now due, okay, here in less than a month. So let's just talk about that recent, at least the update to that, and what your clients need to do to ensure that they fulfill their obligation under that specific fee. All right, so the first thing that we want to tackle here today as part of our compliance grab bag is the overtime rules that have been brought out, the final rules from the Department of Labor. And so how will these new rules impact your clients? I think when they first came out, there were some immediate numbers that jumped out that are part of the overtime rules, but then it kind of subsided a little bit. And now it's, with some employers, it's now kind of reaching a crescendo again. So I know that from an employer basis, they're now looking at this information. They might have questioned or have come to you with questions that you need to provide answers for, but they're literally digging into it here today. And there is an impact, but it's going to impact employers differently to some degree based on their labor force, right? Their workforce. What type of employees are they hiring already? Are they mostly an hourly workforce? Is it mostly salaried? And so forth. So let's kind of talk about this overhaul that was actually long overdue. Right? I mean, the final rule was distributed here on May 18th, 2016. Now, the effective date, which I didn't put here actually on this executive summary, which would be nice to see. I do have it on another slide. But the effective date of employers actually performing these specific requirements with these new rules will be December 1st, 2016. So 12/1 of this year is when that actually will become effective. But the rules here, I mean, it was a while ago. I mean, 2004 was the last update, so there was a need for a meaningful update to these overtime rules. And so you could see with this second bullet point that there's a pretty big gap, right, from the change back in 2004. So it updated. What this Department of Labor overtime rule stated is that it updated or increased the white-collar exemption to $47,476. That's an annual, clearly an annual basis, from $23,660. That's that's pretty meaningful. I mean, when you see that big jump, I think from an employer, you kind of gasp, there a little bit. But when you do look at the, where our wages have gone over these last, 12 years from the last update, this was very much needed. Okay, so that increase is definitely very much warranted. The third bullet there, they revised the annual compensation for the highly compensated employee from 100,000 to 134,400. Okay, so again, a similar jump, a similar percentage types of, well, not percentage, but a similar type of increase that would be warranted from a 2004 previous update. And then the last item, as far as the key summary to the overtime rule, is that there will be automatic cost of living adjustments to be made to these levels every 3 years. So we what the legislation and regulations have put in place is a consistent adjustment to these numbers on an ongoing basis, which means that employers are going to need to definitely keep reviewing these rules, right? So the next update will be 2020, actually, or for the year 2020. All right? So let's dig into these just a little bit further here. So the first thing is the exemption, right? The white collar exemption is what it's called. And this is in place, for employers to provide a means based on certain types of tests to be exempt. Or certain employees to be exempt from these overtime rules, okay, to be in place. And so what these new final regulations really talk about is that the new exemptions, is there anything new, not just a higher number that has to be used or required as a minimum, but what other rules might come into play. And so first off is kind of just looking at the old thresholds. And so now we're going to break this up into per week and then certainly per year. So as I mentioned there before, it was last set back in 2004. So greatly needed, I mean, from just an inflationary cost of living type of an adjustment, it needed to be raised. But the old set, or the actually current set of thresholds, is $455 per week, or $23,660 per year. What that represented in 2015 is that it was actually pretty well below the 2015 poverty line for a family of four. Okay, so you could clearly see the discrepancy on just really how not meaningful that overall number was to the overtime rules. Now, the new thresholds kind of at least bring some alignment here to the current day wages and inflation, okay? So the new thresholds will take effect December 1st, 2016. What it now does is that it moves that threshold from $455 a week to $913 a week, or $476 per year or annually, okay? Now, one of the things that was added, okay, so those things are the same, okay? I mean, other than an increase, right? It's speaking to someone receiving that salary and where that minimum threshold should be for them to be able to be exempt. But if someone was earning less than that, if they did not meet a specific exemption of some kind, then what they're stating is that if someone works 40 hours or more, that those additional hours over 40 would need to be paid time and a half, or the overtime rate. All right, so that's at $913 per week, or $47,476 annually. What can be added, something that was new, kind of new requirement or a new regulation that had come into the new requirements, was that non-discretionary bonuses could make up to 10% of the standard salary requirement. So as an example, if someone could have possibly earned a bonus of $10,000 for the year, let's just say, that $1,000 could be applied to be added to see if that would get them above that minimum threshold. So an employer could utilize up to 10% of that non-discretionary bonus to be part of that standard salary requirement. Now, that could help some employees, some current exempt employees, in getting them over that 47,476 number annually. It could have. Many times it will not, but it's certainly something that could be added to that current salary that exempt employee would be receiving. So, and what that represents, just so you kind of know where this number is being drawn from, it's now representative of the 40th percentile of earnings of full-time salaried workers and in the South or the Southern census region. So that number is really getting down to at least where those lowest wage earners are, at least in the country, at least on average, and drawing at least a much better representation here of the group of people that could really use it as needed, right? So as we think about this white-collar exemption, employers now need to think. They need to think about these new thresholds. Okay, what employees, do I have hourly? Okay, they're hourly. That's one thing. We're probably already providing overtime, payment to them here currently. But then you have salary, right? You expect a salaried individual, an exempt employee, to certainly work 40 hours, but we're not tracking their hours, right? When you think about a salaried individual, we're not tracking their hours. We assume them to be working a fixed number of hours every week. That would generally be anywhere between 32 hours to 40 hours a week, right? And so employers now need to think about those definitions, and based on these new thresholds, what do I have here in my workforce that I've labeled as exempt but are either well below or close to that 47,476 number on an annual basis. So there are three tests that an employer could utilize as they are looking at an exemption for or on a specific employee, okay? And they can use three types of tests, and these are the tests that are laid out. You have a salary basis test, a salary level test, and then a duties test. Each of these are very, very important, okay, in the process. They need to meet these definitions, these three tests, in order to receive that exemption, okay? So let's take a look at this. So what is the salary basis test? This is pretty basic, okay? But an employee is paid on a salary basis, not subject to reductions, okay, of their salary based on the quality of their work or the quantity of their work. So it's in essence saying, listen, employee, I'm giving you this salary. I mean, I'm assuming you're working 40 hours a week, but you might work more than 40 hours. You may work less or fewer than 40 hours, but I'm paying you this salary based on a 40-hour work week. All right, but there's no attention per se to the quality of work that they have as far as that salary, or the quantity, their output, what they're generating, in that. So that's the salary basis test. It's very typical, right? I mean, of what a salaried individual would have. The next is a salary level test. So again, very basic. It is the amount of salary paid must meet a minimum salary level of $913 per week and 47,476. So that threshold becomes very, very important. If they're below those dollars per week or annually and currently listed as exempt, then they would fail the salary level test, which would mean that they would be required to pay overtime if that employee were to work 40 hours or more. The last item is called a duties test, and we'll go into just a little more detail on these here in just a second. So, but there's another part of this test, or an exemption, that if an employee fits one of these duties, okay, or tasks, responsibilities, occupation, but if they primarily involve exempt executive, or if they involve executive responsibilities, administrative responsibilities or professional types of responsibilities, they could be exempt, okay? Again, if they meet the salary basis test, the salary level test, and then meet one of the duties tests, okay, of what that employee is actually performing on a day in and day out basis. One thing that I want to mention as a bullet I've put in there, because we've gotten some questions on this, is that the definition was not updated. So as you go into the Department of Labor site and you're pulling information, there is no update, here for 2016. These definitions have actually stayed the same, okay? Here at least for some time. So let's define these. Let's just kind of move these here to the next level. I think a lot of this it is basic, but I do want to give some examples of this as well. So professional exemption. So when does that professional exemption come in? You have learned professionals, creative professionals, teachers, and those that practice law or medicine, okay? That definition right there very succinctly would meet a professional exemption. So just to take the definition a little further, a professional exemption must primarily perform work that either requires advanced knowledge, okay, in a field of science or learning. That's where we get teachers, and practicing law or medicine comes in. It could also require invention, imagination, originality, or talent in a recognized field of artistic or creative endeavor, okay? So it kind of fits into that creative professional category, okay, as it's kind of quoted there. So basically what happens is that the salary level and salary basis requirements do not apply to teachers, lawyers, or doctors. So interesting, right? So if you have an employee who fits this definition, those other two tests actually do not apply specifically to those individuals, okay? To strictly the teachers, lawyers, or doctors, okay? Not some of those other artistic or creative professionals that I had mentioned there before. Administrative exemption. So an administrative exemption would occur when an employee's primary duty must be the performance of office or non-manual work related to the management or general business operations of the employer or the employer's customers. What I also like about this definition is that it goes on to say that additionally, the employee's primary duty must include the exercise of discretion and independent judgment with respect to matters of significance. How about that, huh? So it's meaning that these administrative folks are actually making some decisions, right? That's pertaining to the business to a degree. But many, and I'm going to give an example of an administrative employee here in a second that might just bring that to life here a little bit more. The last is an executive exemption. And so this definition then talks about employees that have the primary duty of managing the enterprise or managing a customarily recognized department or subdivision of the enterprise. And additionally, they direct the work of at least 2 other full-time employees or their equivalents, okay? And there's one additional item, that they have the authority to hire or fire other employees. So here you have someone in management, supervision, you have someone at least in a small to large type of authority that would be granted. All right, and and I'll give you an example here of what the executive example would be. Let's actually go there. So these definitions are very important. So as you look at the duties test, you need to understand that an individual will need to meet all 3 of those tests, but for when we're talking about teachers, lawyers, or doctors, okay, as it relates there to that professional exemption. So the duties test. Just an example, I just thought this would be very good. The Department of Labor did a wonderful job providing some examples of what this might look like, and I thought a couple of their examples would be very, it would provide some practical application here today. So an office manager performs, so in the administrative exemption, okay, as part of one of the duties test, an office manager performs the duties of a bona fide administrator, paid a salary of $42,000 a year. They work 9 to 5, right? I mean, that's could be 8 to 5, you know, depending on their, you know, their lunch hour, all of that stuff, but 9 to 5. They put in their 8 hours a day. Because of the salary level, the manager is no longer an exempt employee. So as we think about these tests, right, we think about what is needed for the exemption, they need to pass the salary basis test. Now, is this individual paid a salary? Yep, I mean, sure sounds like it. Yeah, 9 to 5, just paid that salary of $42,000. Did they meet a duties test? Yep, we've determined that they're a bona fide administrator, okay, of the company. Okay, so they meet that test. But what they didn't meet is the salary level test. They're under that 47,476 for the year. And so the impact, I mean, is there an impact? They're no longer considered, actually, upon the new definition, they are not an exempt employee, okay? And actually then would be required, or this employer, if this office manager were to work more than 40 hours, would be required to pay overtime. Now, the impact of this example, though, is really negligible, right? The office manager is regularly working from 9 to 5, you know, not creating that overtime potential. But we'll talk here in just a second, should they be monitoring this office manager's hours? What if the office manager did in a given week or 2 weeks or month have those overtime hours? Now it becomes very important to be able to track those specific hours because overtime would be required. Let's go to an executive example. Again, I like this specific example as the Department of Labor had kind of provided it. So we're looking at the executive exemption, and it states here, a maintenance department crew lead, okay, so a supervisor in essence, coordinates the work of 3 groundskeepers and makes recommendations for their terminations and promotions. So if you recall in the definition, they need to manage a department or subdivision of the enterprise or manage the enterprise. They need to at least direct the work of at least 2 full-time employees or their equivalents, and they need to have the authority to hire or fire, or make suggestions or recommendations to the hire or fire, you know, even as well. So that first part is looking good. The crew lead earns $38,000 a year. The salary level, as we look at the test, the salary level is not met and is eligible for now overtime pay. So as we look at the impact on this example here, you know, overtime pay, you know, in certain times of the year, you know, based on spring, summer, fall, winter, right? I mean, depending on snowstorms, wherever they're located, they could absolutely put in overtime in a given time period. And so overtime pay may be necessary or required, you know, for this particular individual. And so, you know, we're going to go over some you know, some thoughts and strategies on what employers will need to do in order to get this specific employee either in an exempt fashion. Okay, so we'll kind of talk about that. But you understand now how that definition becomes very important. The employee must fit under one of those duties, tests, okay, those 3, professional, administrative, executive, and then it's also going to need to follow or pass the salary basis test and the salary level test, okay? So a question here, you know, just I see as it came up here, you know, what about non-salaried hourly employees? So this specific overtime rules are specific to exempt employees in determining whether a certain type of exempt employee or non-exempt employee should be given overtime. And so non-salaried hourly employees, if they're working 40 hours or more, you better be giving them time and a half. You better be tracking their hours. You better have a lot of record keeping there, as it relates to those hours. But this specific rule is not necessarily tied to hourly. Those rules are already in place. This is really accommodating those exempt or salaried employees. So a highly compensated employee, they did provide a further increase, which was needed here for a highly compensated employee. They did increase the level from $100,000 to $134,000, as I had mentioned before. But one of the criteria that was put in place in regard to a highly compensated employee is that this type of an employee only needs to qualify under one of the duties tests in order to be exempt from the overtime pay. So whether they are considered, professional, administrative, executive, and so forth, only one of those, and they're good, and exempt. Generally, it's not an issue in regard to these individuals being exempt, okay? But one thing to note, the Department of Labor, the IRS, when you think about from HIPAA and COBRA, it just seems like there's so many different varying definitions from Section 125 to Section 105 to the Department of Labor overtime rules that this threshold of highly compensated employees, this definition, this threshold is different when we're talking about Internal Revenue Code Section 125 or Section 105. So as we're talking about doing non-discrimination tests, and we're looking at those individuals that are considered highly compensated employees or individuals when you're performing a cafeteria plan test or a Section 105 self-funded non-discrimination test, those definitions of a highly comped individual are completely different. So just keep that in mind, that there is no similarity, comparison, I guess, in regard to the thresholds. So practical application, what does this all mean to an employer? What can they do in relation to existing employees that they're now looking at those employees? They're not meeting those minimum thresholds. They might be meeting the duties, right? They perform one of the duties tests, but they are now under that threshold. What does this all mean to an employer? And I've just kind of put this together in 4 categories, and we'll take it even a step further here as far as its impact. So what does it all mean? So basically what it's saying is that employees that fall under the threshold can continue to work over 40 hours, but they're now going to be paid at the overtime rate, okay? So again, this threshold has generally always been there. It's been there a long time, but it was at a much lower level where majority of exempt employees wouldn't have fit under that $23,000 number anyway. Now that it's at 47, yeah, its impact can clearly be felt. So if employees fall under this threshold, if they are defined as exempt and receiving a salary and work over 40 hours, they will now have to be paid that overtime rate. So employers could limit the number of hours worked. As you think about the impact here, employers are going to need to think about their existing exempt employees, or I should say salaried employees who are not exempt or do not fit under the white-collar exemption. Maybe the employer will now have to limit the number of hours worked to only 40. What does that mean if that employee consistently kind of works over 40 hours? Will the job get done? Do we need to hire people? Do I need to pay this person overtime? The third, employers are really going to need to review their job descriptions, right? Not to say that every employer had a different definition for who's exempt or non-exempt, although we could probably debate that that's the case. They're going to need to get a tighter description of who they classify within their organization in regard to who is considered exempt, salaried versus non-exempt or non-salaried or hourly. So they're going to have to possibly redesign to kind of accommodate the new FLSA regulations. And then fourthly, there's going to be many instances where an individual is pretty close to that 47,476 number. So what can an employer do? Should they just increase their pay to kind of get them over that threshold? I mean, it is quite possible that you have certain individuals that are just very close, 1,000 or two, from that 47 number. And, well, maybe what the employer should do based on their work or duties that they need to perform, maybe it's prudent for them to raise their pay, right? So that's, that instead of paying that overtime, they just go ahead and raise their salary. That may or may not be a great decision to make, right? But each of these four things are very important. It's getting the employer thinking about how they need to move forward with existing employees and how they will need to hire for new employees as well. So just thinking a little bit further here about the impact, as you think about not only to employers but to us, think about, many of our webinars here over the last several months, right, years, right, because of the Affordable Care Act. We've talked about health costs. We've talked about how employees and individuals need to consume their health care dollars. This has an impact, potential. There are exemptions certainly for those who practice medicine, right? So, to some degree, but we've got a lot of other individuals here that are part of the healthcare system and personnel that really drive our healthcare system here today. So could employers that need to increase these, or now that we have these new overtime rules that could increase the cost to the wages, could that not only increase the cost for healthcare services in the future? So this impact, although very positive, right, to an individual that fits into these thresholds, from a business perspective or even from a consumer perspective, this can have an impact of raising our cost for us to consume healthcare or certainly other items. Think about mom and pop businesses, your small business employer that generally relies on longer hours and low wages, or lower wages at least, to really get maybe to start their business from the ground floor or to get their business booming. They require that longer hours. They may have set up folks that are exempt, to assume those. But now that salary is now below the new thresholds, which can greatly impact the overtime or the type of labor force that they need to actually go after and utilize for their company. Think about nonprofits. They are trying to squeak and maintain every dollar and penny that they have to use for their specific charitable, occupation or, their focus. So what are nonprofits going to do? Do they just make everyone hourly, really curb everyone's time? Do they limit the overtime hours? We all know that from a nonprofit standpoint, you work a lot of hours. There's a lot of volunteer hours there in nonprofits. But also think about from a worker perspective. I was a salaried employee. All I needed to do was come in each and every week. I leave, I go, I put in my time. Now are you saying because I'm a salaried individual, but now I get overtime hours, the employer is going to need to record those hours, right? Keeping track of those hours. Gosh. Does that mean now as a worker, an employee, I now have to punch a clock? I've got to punch in, clock out so that the employer has that? I don't know. How do those workers feel? It's a dynamic change, that's going on for those workers. So some strategies, as we think about strategies to stay compliant, I've put together just a few items here that I want you to think about, and these are just good thoughts to put into action actually for your employers. We have some time. The good news is that there is time here to plan. The effective date of the new thresholds is December 1st. So, okay, we have some time right now to really tighten up the definitions of what we are classifying as exempt and versus non-exempt employees. Let's ensure that the folks that we have as exempt that currently work for us or work for that particular employer, that they have actually classified them correctly. Or, and clearly they might have, but it's just really to put in perspective, I've got several employees that are near the 47,000 number threshold. I have a certain number of exempt employees that are salaried employees that are absolutely working greater than 40 hours. So it's really tightening up the policies so that with existing employees, but also new hires, that you have a tight policy going forward that will certainly align with these new rules. Record keeping. Start getting your clients thinking about how they are going to keep the records of these hours for these employees. Now, most employers have hourly workers, okay? So they're in some form or fashion, they are needing to record keep through time and attendance systems, time clocks, to just simple time sheets, right? That they fill out to show what hours are worked. So they need to think about it based on their employee population, those employees who fit this new salaried, definition and or exemptions. They need to think about how their time and attendance systems or their current structure is going to conform to the new record-keeping opportunity here for these specific employees. Now, it would be best to automate. There are fantastic solutions out there in regard to time and attendance systems that can completely automate the entire process. However, the Department of Labor has not produced any strict guidelines as to how an employer does need to maintain those records. What the Department of Labor has stated is, you better maintain those records, but do so in the capacity that you're able to, as an employer. One note with record-keeping systems is that it can truly positively impact ACA reporting. So if you're talking with an employer about these new rules and they are not having a time and attendance system, having that system tied to payroll into an ACA solution that will create all of the applicable large employer forms, right? All of that, that's huge, and that's a positive, efficient impact in regard to ACA. Personnel hiring decisions. As far as tightening up the definitions of exempt versus non-exempt, they need to look at their current staffing needs. There could be employees, salaried employees, who are working greater than 40 hours a week. All right. We may not want to pay them overtime, right? So we need to keep them at 40 hours. But I still have a widget to create, and I'm going to need to hire somebody now to actually come in to work those. Maybe it's part-time, but it's work on fulfilling those extra hours of work that my salaried employee was taking on before. So there's just these personnel hiring decisions that will now need to be made in light of these new thresholds being in place. What an employer will also want to do right now to stay compliant is they're going to want to begin making communications to their management, to their personnel, to those that fit that administrative exemption. Their supervising, their team leads, their managers, their owner, whomever that is. You need to make sure that this communication about what the new definitions are, what the new thresholds, you need to communicate that ultimately to that management. As part of a takeaway from this webinar, we're going to provide an awesome ebook that will go over all of these specific items that I think will be extremely helpful. So that is kind of my summary of the Department of Labor overtime rules. As you can see, as you dig into this, its impact is a little farther reaching than just simply, hey, I got to pay somebody, all right, 47 is the new threshold. It goes a little deeper than just kind of that superficial. There's going to need to be meaningful changes with each of your employers, clients, prospects going forward, but they have time to plan, and you need to begin planning here now. All right, the next item as part of our compliance grab bag is kind of the appeals comparison. And, I think that it's very important to talk about this because the IRS has now been given the complete opportunity to begin its communication to employers whom they feel might be impacted or the need to enforce the employer mandate penalty. So as we think about an appeal, right, just put in the classic definition here of appeal, an application to a higher court for a decision to be reversed. Well, there are two higher courts that an employer is going to need to appeal to. that they're going to see here right away. And the first entity that, well, I shouldn't say the first that they're going to hear from, but the first entity to speak about is the one from HHS. Okay, and one of the first, as HHS had made its announcement that they are going to be sending notices to employers, for them, they're going to recognize that an individual on the federal marketplace or exchange that they have qualified for and received a subsidy. And if they've received a subsidy, then the HHS would send out a notice to the employer for them to summarize and appeal that, hey, did you offer coverage? Was this employee eligible for coverage? What did you make it affordable coverage? And so each employer is going to need to explain or summarize, certainly, actually in great detail, in regard to why that specific individual would not fall, or where that employer would not qualify for that penalty, okay? So the employer notice program is what it's called, and the notices have already begun to be sent out. Any individual who receives an advanced premium tax credit or subsidy is the trigger. The second trigger, though, and I put it as a note at the bottom, the notice is only provided if the full employer address is actually provided when that employee enrolled in that coverage. Okay, so if the address, if that complete address is not there, the employer will not get this notice, at least for now. That is what is being stated. The employer has 90 days from the date of the notice to appeal, okay? And in that appeal, they're going to need to fully explain how or why or if that employee was truly eligible for that subsidy, based on what the employer was offering or not offering to that employee. Now, I have listed there are certain states that have their own appeal form. You can find the standard HHS employer notice form, appeal form right on the website. You can Google that and find that. But other states, as I have listed here below, they actually have their own appeal form that would be used. Okay, so now HHS, they want you to, as an employer, to explain whether that individual actually was qualified for an advanced premium tax credit, right? The employer is going to have to provide that explanation. But HHS is not the enforcement agency, all right? The IRS is, all right? And so publication 556, all right, and I don't have time to read through it here today. Some weekend reading, go for it. Publication 556 outlines the appeals process. Okay, so I suggest you certainly Google that publication to look up that information. But the appeals process is this. The IRS is seeing where those subsidies are triggered, right? So as of June 30th, employers were responsible, applicable large employers were responsible or required to submit forms 1094 and 1095. They're now reviewing those forms. So starting in July, right now, this month, they can actually begin assessing a penalty to employers. All right, so this is the earliest. The forms were just submitted, electronically. So, but now is the time. July, probably more likely, well into the third quarter here before you start seeing the IRS sending out these specific notices. They may appeal directly to the IRS, which is probably very likely. For those more significant types of cases, they can appeal directly to U.S. Tax Court or the United States District Court. But this is the appeal that matters most. I mean, HHS, it matters. See, a potential successful appeal from the HHS could alleviate any real issue and appeal process with the IRS, but it doesn't necessarily mean if you have a successful appeal with HHS that you're actually going to have a successful appeal with the IRS, all right? But what we've been told is that a successful appeal with HHS will go a long way. So an employer is going to want to take specific attention to how they put information in for the HHS employer notice and that appeal process, because it will be important as that as the decision is rendered, the employee receives that decision from HHS and the employer. And that employer is going to want to record keep that information so that they have that appropriately for the IRS. So what the main thing you want to get out of this and this particular compliance grab bag item here today is that there are two specific appeals processes that can occur. And if an employee receives a subsidy, that's going to be a trigger from the HHS side of the equation, and the forms 1094 and 1095 are going to be a trigger that comes from the IRS. Okay, and so the one that matters the most, because that's who's going to enforce the penalty, is the IRS. But please tell your employers to take the time necessary and needed to actually complete the appeals process on HHS, because a successful completion could be very good in getting a successful decision from the IRS. All right, lessons learned. I wanted to provide just some commentary and some facts, some information here in regard to the recent reporting that has just been completed. Here at the end of June, massive amounts of e-filing has been completed, submitted to the IRS. And it's important now for you to understand, and as you communicate with employers, what information is coming back, what is being spit back to them from the IRS. Because once you submit something, the IRS is going to provide either acceptance or rejections to some degree in their response. So let's look at the summary just here quickly. And this is, certainly we know this already. If you have a manual filer, that was due May 31st for them to manual file. All electronic filers would be here June 30th. Certainly for those clients who are with PrimePay, all of our submissions were e-filed. Okay, so just a quote that I got from a recent IRS statement here in regard to kind of these last-minute ACA reporting requirements. They state this: filers of forms 1094 and 1095 that miss the June 30th, 2016 due date, and just I put this down for a reason, will not generally be assessed late filing penalties under Section 6721. That's the key penalties, 6721 and 6722. If the reporting entity has made legitimate efforts to register with the AIR system, so the e-filing system from the IRS, and to file its returns. And so it goes on to say that, listen, there could be issues, problems, but have you made legitimate efforts to not only register, but to get that submission through? They want to see efforts, ladies and gentlemen. Make sure that your employers have made those efforts. They've also stated this as part of their recent reporting notice and kind of FAQ that has come up. The system, they might have received a submission response that said there were errors, it was rejected, it was accepted, and so forth. Well, what they do want to let every employer know is that they're continuing to accept information returns filed after the June deadline. So even though you may have missed it for June 30th, get it in. Just don't wait anymore. Just continue to work on getting that submitted. If a submission is rejected, the employer will have 60 days from the date of the rejection to submit a replacement. If it's accepted with errors, you can, again, continue to submit corrections after June 30th. So the bottom line is this: a good faith effort is supposed to occur prior to your distribution of the forms to the employees in the filing, but a good faith effort is also getting it through to completion. And the IRS has stated that, hey, just continue to make every attempt to get that information into us as soon as possible. They have not put specific timelines or deadlines. They've just stated, get it in, and get it in quickly. There are 4 specific definitions that have come out of these submissions. And so I'll just go over these briefly so you understand what these definitions are. There's rejected, which actually, that's probably pretty clear. It's accepted, well, which is probably pretty clear as well. But then you kind of run into these partially accepted or accepted with errors. So let's just kind of touch on this. So rejected, basically know this: if a file was rejected by the IRS, that means that it cannot be processed at all by the IRS. A receipt ID will be given, okay, from what will be produced from that submission from the IRS, but no data will reside with the IRS. They got nothing, okay, other than an e-file submission attempt, all right? So if it's rejected, your employers need to ensure that they're going back in and trying to move that to an accepted basis. Accepted. It is what it is. Nothing further needs to be done. No specific errors found. You are good to go. Partially accepted. Partially accepted means that the IRS has accepted some of these submissions, but maybe rejected others. That could be due to a social security number validation, name versus TIN validation. So it's just accepted some, rejected others. And then lastly, accepted. Basically what they're saying here is the file is accepted. The IRS is holding the data, they have it, but there are a few little mismatches that have been found, and they are still requesting a correction by the filer, okay? So as we look at kind of, I thought would be kind of helpful, kind of interesting, to kind of get some PrimePay statistics. We filed for quite a bit of employers, a lot of employers here. And as you can see here, at least on the first go-around, hey, this was the first attempt by everybody, right? But it looks like, roughly 70-some% were accepted with errors. So as you look at kind of our population, most of our employers were either accepted or accepted with errors. And accepted with errors are really just looking at some simple things here. Biggest problem areas was the name, that the IRS is not, the name that they have in their database is not the same name that was matched up to the name that you provided. So, for instance, my formal name is Stephen with a V, but my employer might have wrote it as Steve Jackson, right? So it's not matching. It's accepted, but with errors. And so what employers must demonstrate is that the errors were reviewed and corrected. You want to make sure that each employer retains their receipt IDs from the IRS. You always want to keep that on file to show that when you submitted it or submitted it again for the corrections that were needed. And then you want to document your review of all that inconsequential errors, which are like the proper name, not matching up to social security number, and so forth. All right, very good tidbits. I mean, as you look at our pie chart there, really from the initial filings, we had very few percentage that were rejected or not filed at all. Okay, those employers who are still waiting to certainly file. So at the end of the day, we got most employers got over the goal line. All right, the last item, as part of my compliance grab bag here today, we don't want you to forget about the PCORI fee. All right, this is still a very important fee, as it was brought out back in 2010. PCORI stands for the Patient-Centered Outcomes Research Institute. That was created actually to fund very good research, but yet this was a new fee that employers, carriers were required to pay. So it's funded in part by the fees paid by health insurers and plan sponsors. And it's the plan sponsors that I really want to touch on here today. Many of your employers have self-funded group health plans. Well, a couple of those that are considered group health plans is your health reimbursement arrangement, or HRA. It is always a self-funded group health plan, and generally the employer is the plan sponsor, so they must report and pay the PCORI fee. And then the one that is more, I would say, more rare, it's less likely to see out there because most employers are creating health FSAs or flexible spending plans that are accepted benefits. But if, and it's rare, if a health FSA is deemed a non-accepted benefit, they must also report and pay that PCORI fee. So let's just look at just quickly the due dates, and then we will wrap up. Plan years, okay, so the calculations are this. If the plan years end on or before 9/30/15 and before 10/1/2016, it's rated at $2.17 per covered life. For those prior months, 9/30/14 and before 10/1/2015, it's $2.08 per covered life. So we're looking at calendar year 2015, and so we have a $2.08 rate, basically through, through September. And then from October through December, we're at $2.17, okay? So two different rates there that would apply. Now, keep in mind that HRAs, is based on the average number of covered lives, which under an HRA is considered participants, okay? Participants, usually employees, each quarter. And so we use here at PrimePay, and we provide this number to employers, under the snapshot count method. We provide what that average count is on a quarterly basis. The filing deadline is the employers are to report and pay annually. They're going to utilize IRS Form 720, and they will generally file no later than July 31st, okay? So they have generally July 31st is the due date. However, July 31st falls on a Sunday this year, and that means that the due date here for the 2015 fees are going to be due on August 1st. So kind of a quick update there on the PCORI fees. So lastly, a lot of information there, right? But good stuff. Really gives you an opportunity to drive some great practicality and discussion to your employers. But just to kind of review a couple of the key employer action items here for you. If you haven't discussed this with your employers here already, you're going to want to do so. Review the impact with each of your clients, based on these new Department of Labor overtime rules. You maybe your renewal is at the end of the year. A lot of times you're going to have summer meetings here, right, to kind of start preliminary discussions, estimates and such as it pertains to your health renewal. Use that time, or use a portion of that time as part of your discussion with how this new rule could impact those existing employees, right? You've got census information that you're going to collect for your underwriting or what have you. Maybe that impacts some of what the new payroll deductions. Maybe it's going to impact if there's going to be an increase in the salary adjustments, right, to get them over the threshold. Does that impact affordability for health care? So those decisions really tie in together as part of the discussion, so review that impact. Also review the appeals process. If your employer has not received an HHS appeals notice or an employer notice yet, they're going to. Potentially, not all, but if an employee did qualify and receive an advanced premium tax credit, they indeed could receive that notice. But also, if they have e-filed their Forms 1094 and 1095, the IRS could be asking for that appeal as well. So remember that a successful appeal, this isn't a guarantee, but a successful HHS appeal can certainly make that IRS appeal much easier to attain. Also then ensure that your clients have made every good faith effort with ACA reporting and filing. Just ensure that they're wrapping it up. Did they get a not accepted with errors, but did they make those corrections, and do they have an accepted submission, from the IRS? Retain those receipt IDs. Make sure that they have fulfilled their good faith effort to make it happen. And then don't forget of the PCORI obligation. Clearly, don't forget, because most of your employers have HRAs, right? They have self-funded plans. So make sure that you're reminding them of their obligation here, and that obligation is due as of August 1st of this year. So I want to thank you for attending. I think I'd gotten through a few of the questions. There were some very good questions there. I think is mostly what was written, but if I did not tackle it appropriately, we will get back to you for sure. I want to point to our broker concierge team. If you have questions about how PrimePay is providing communication and direction to other brokers, to our clients, seek us out. contact our Broker Concierge team here today, and I have the information there above. But look for the webinar follow-up here that will come here just in a matter of a couple of days. We're going to provide you with the link to the recording here today. We're going to provide you, actually everybody is going to receive 2 ebooks that are very comprehensive. It's going to be an ebook that's covering the overtime rules called the Understanding the Overtime Overhaul, and we're also going to provide the ACA Starter Kit, which is a wonderful ebook that provides it's a nice, concise, comprehensive ebook talking about the various ACA obligations, and I think that will be very helpful. Exclusive to our BC partners, we will be providing the specific PCORI announcement that we have used with our clients, providing you with the most up-to-date information in regard to that PCORI fee. Might be something that you may want to use and distribute, certainly to your clients. And you also will receive our presentation slide deck. You can find all of that in our our Broker Concierge portal, Broker Portal, where you can find all the tools and resources, all the webinars, the recordings, and the presentation slide decks of our various webinars here and presentations over the last several months. So with that, that will conclude our webinar here today. Our next webinar, we hope you can join us on Wednesday, August 3rd. We will have a very good topic for you here in the coming month. So with that, I wish you all the best here on July 6th. Wish you well, and hope that your summer goes well, and we look forward to seeing and hearing from you at our next webinar next month. Have a great day.